With today's interest rates, along with the property taxes in Temple, it's a lot harder to cash flow. I'd say about 80% of homes in this market are not going to cash flow if you buy them at market value. 3 of these 8 buy boxes really do have a good cash on cash return whenever compared to other rental markets. If you buy a rehab, you are going to cash flow more. That's the bottom line. It doesn't matter if it's a 3-2, if it's a 2-1. The numbers on all of these look better as a fixer-upper. So let's get right into it. So what is a buy box? A buy box is a written rule for what you will buy. So you have the price, the property condition, the property year, the neighborhood, the rent, the property type, and then on top of all of that, the end goal. And the end goal is the most important because there are 3 different investor strategies that really work well. But each of these 3 strategies are going to put you into 3 completely different properties. All right, goal number 1, what everybody loves to talk about, the cash flow. How should you set up your buy box if your goal is to buy cash flowing properties? So we're gonna start off with the most efficient, and that is going to be a 2-1 that needs a full rehab right by the hospital. You can pick these up from $70,000 all the way up to like $95,000. They're typically going to need a full rehab and then even installation of the AC or maybe some foundation work. They're typically pier and beam homes. So, the rehabs on a smaller home they're not gonna be that expensive. I would, if it needs everything, including the central AC and a roof and foundation, I'd probably budget for around $60,000, but you're going to be buying it a little bit lower than that $70,000 purchase price. What I typically see is the roof will be fine, and you're looking at like a $35,000 rehab. The after repair value on these is anywhere from $140 all the way up to like $165 on a 2-1. And these are going to cash flow. So these are going to rent out as a midterm rental for $1,900 per month. That's what I use because that's what I get for my midterm rental. But also you have to keep in mind that there is a cost for the midterm rental. You have to get furnishing, so that's another $2,000 all the way up to $5,000. And you have to keep the rehab on these a little bit higher end to stand out in Furnish Finder. I'm going to post the numbers of an ideal midterm rental purchase and rehab and getting it rented out with what your cash flow will be. Bam, right here. Then let's keep going. So what if you don't want to do a rehab? I get a lot of people, a rehab is a lot, especially if you're a first-time investor. You're still going to want to be in the hospital district as well. So you can get a turnkey 2-1 for if it's not really set up for a midterm rental. I just had a guy close for, it was his primary residence, but he bought it for $130,000. That's a pretty good deal that you don't typically see on a turnkey property right by the hospital. But I would plan from $140 all the way up to like $170. And at that $170 mark, I would want to have a nice, ready to go midterm rental, like it was already rehabbed with higher end finishes. And those numbers are gonna be right here. The thing with that is that you don't know who did the rehab. You don't know, you have to get an inspection still. I don't care if it was recently remodeled. I would caution more towards an inspection if somebody else did the rehab. The other benefit with doing your own rehab is, first of all, you know who did the work, you know the work was actually done, and then also you can factor that into your CapEx. So if I do a full rehab, I don't do a full 10% CapEx because that's overkill at that point. Whenever you know all the stuff is new, you can dial the CapEx down to 3 to 5%. The next type of asset class the next type of buy box that's going to cash flow well in the Temple area is going to be an as-is medium condition 3-2 as a long-term rental. So those will typically rent for between $1,500 to $1,600 per month, around 1,000 to 1,200 square feet, and you can get into those for 145 plus. 145 is going to be a little bit rougher condition, and you're not going to see that much cash flow on those. What I like those for is that I think that if you are not cash flowing, you're putting yourself at a higher risk than if you're even just making a little bit and you're setting some aside for the CapEx, for the property management, for whatever it is. Whenever interest rates go down, you refinance it and you're going to be having a completely passive asset, very low vacancy on these properties by the hospital, especially the 3-2s, and then you're going to be cash flowing as well. So how do you get into these? The thing with the ones by the hospital, if they're, even if it's a 2-1, if it's a cheaper 2-1, they go quickly. Reach out to me. You can call me, you can text me, you can email me, you can schedule an appointment with me down below. 15 minutes. I'll get you set up on the MLS, get your buy box dialed in. But the first step is reaching out to me, because the people who are first to see the deal are normally the people who are going to be able to purchase the deal. You take out a lot of the competition like that because they're not seeing it until way later. Multifamily investors. If you want cash flow, this is a lot harder in Temple. There's not that much inventory. I actually go through this quite a bit with my investor clients. There are very few locations that will cash flow on a multifamily home in Temple. First of all, let's start off with the quadplexes because that's the easiest. There's some quadplexes by the hospital. Those will cash flow. There's also quadplexes on Salisbury. Those will typically cash flow. Those are the best opportunities for investors in Temple, but they really do not come up often. Typically they'll need a rehab, which is actually good. I think the best strategy would be do 2 and 2. 2 long-term rental units, 2 midterm rental units. You're going to have good cash flow. Those quadplexes, I've seen them sell for $200,000. So what can you expect for the rents on those? So if you don't do anything to it, you keep it as is, you're going to be looking at $600 to $700 per month on each unit. But if you do a rehab on it, you can get $900 to $1,000 per month. And then for the duplexes, you have quite a few more options, but you still want to be in those older, built before 2000 duplexes, because you're going to see those under the 250 mark, and that's really the mark that cash flows here. So if you do a 3-2, you're looking at between 1100 to 1300 per side. The numbers are going to be right here with the cash flow. It's not as much cash flow as you would expect, but you have to remember the interest rates are crazy right now. Those 3 buy boxes are the best buy boxes to cash flow in Temple. All right, now let's move on. Let's say you don't want an older property. You want something like the early 2000s, late 1900s. There's a few good options for that. There's brick slab homes in Canyon Creek that you can get for under $200,000. Now those are going to rent for around $1,600 to $1,700 if you get a 3-2. I have some clients that have a 2-1 over there, which is actually, it's doing well. Say they had it rented for $1,900 as well. It's one of my favorite properties because it's brick slabs, got large windows in the living room, very nice. It has vaulted ceilings, a lot of things that are really great about this property, and you really don't see 2-1s in that age range in Temple anymore. You're going to be in these Canyon Creek properties, or Cimarron specifically is the Cimarron subdivision. You're going to be at break even to maybe $100 a month in cash flow after you set aside CapEx, property management, vacancy, whatever, all the rest of the fees. And this is another buy box that's important to be on the MLS, know as soon as it comes out, and then jump on these fast if a deal comes up, because these do go fast in this price range in this location. What I like about these properties is all the different exit strategies that they provide. So whenever you get one in this area, especially if it needs a rehab, you can rehab it, you can flip it, you can do a long-term rental, you can do a midterm rental, you're close to the hospital. There's a lot of really good things about this location and the homes that are in this location. So it's one of my favorite areas to invest in Temple, especially for the person who wants a little bit less risk with their portfolio and they want a little bit less headache. And then they're also going to have better appreciation than the homes right by the hospital. Only because you now are able to appeal to a first-time home buyer who may be doing an FHA loan, who is concerned with buying a pier and beam home because it's not 100% level all the time. So I think it's a great location. All right, now here is one that I actually just had a client who did this, is the appreciation play. So number one, if you have a kid who is going to the University of Mary Hardin-Baylor in Belton, there are great opportunities to buy a property and then rent that property out to your kid and have them get roommates. It's actually exactly what he did. There's good interest rate incentives. The payment is not crazy. And then if you do it correctly, you can possibly get in for, make it a second home and put very little down payment, which is a great strategy, and it completely offsets your risk on the deal. These homes will rent for above $1,700. The vacancy is hardly anything in these areas because it's a good area. You're in Belton ISD. That doesn't mean anything to me, and I'm not saying anything. Belton ISD, Temple ISD, for me, me da igual, de verdad. All right, let's keep going. These are new builds. You have the new build incentives, you have the new build interest rates. The payment is not bad. There's also opportunity for investing in new builds in East Temple, which I say things about East Temple, but there's a section that has, statistically, it has a higher crime rate, but there's a whole nother section where the new builds are, and you have really great prices. The numbers work, even with 5% down. If you get the builder incentives, the numbers just work. New builds are starting to become an option for people who don't really want a cash flow. They're okay with breaking even. They want an appreciating asset. They want less stress on the resale and the comfort of having a new build with a warranty. And then you have kind of the West Temple area where you're probably going to be at a negative cash flow. The rents just don't line up with the purchase price on these properties, with the exception of kind of the Morgan's Point area, where you are going to be buying a slightly older home that is possible that it needs a rehab. So in each of these buy boxes, there's a lot more. Well, I could go a lot deeper in each one of these, but this video would be way too long. If you are interested in investing in Temple, Texas, reach out to me. You can call me, you can text me, you can email me, you can schedule an appointment with me down below in my Calendly. I hope y'all enjoy this video. Let's get it.